It is 8:52 a.m. Pacific Daylight Time. It's the second day of Spooktober 2025, and this is episode 1181, I believe, of Bitcoin and. Yes, it is 1181 of Bitcoin and. You're here because you need all the news you can use about Bitcoin and more. We talk about Bitcoin and macro, and sometimes we do farming, and we get into all kinds of stuff. Why? Well, because money touches 50% of everything that you see. So Bitcoin is money. So therefore, how does Bitcoin fit into the larger picture in the world? That's what this show does. Today, we're going to talk about the U.S. Treasury softening its crypto tax rules. We got a senator that's accusing the word crypto is just being thrown around too much, but here we go again. A senator has accused a crypto billionaire of tax evasion. We'll talk about it. Stablecoin duopoly ending. Dominance is coming into the picture when it comes to Tether and Circle and the old school stablecoins. And why are we going to talk about that? Because dominance is dumb. It's been dumb for Bitcoin, and it's going to be dumb for stablecoins as well. And then we will be welcoming our newest member to the Circle P right before we get into Stripe launches open issuance for stablecoins. Yeah, Stripe is looking to use stablecoins. We'll talk about all that. Remember what I was telling you about the Chinese woman yesterday stole 61,000 Bitcoin, yada, 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 and the UK confiscated it? It's taken exactly 24 hours for them to start going, well, should we give it all back to the people that got defrauded? Yeah, you knew it was coming. You knew it was coming. JPMorgan is making news today, as are Swedish lawmakers. I swear that I've talked about this before, but I've gone through like the old shows that I have, and I don't see this anywhere. So I'm going to take a chance and talk about Tether adding 8,000 Bitcoin to its reserves. I swear I've done that before, guys, but I cannot find it in any of my transcripts. So if I've done it before, please remember, your host, me, David Bennett, has about 3 brain cells left after all his high school days and college days, and they're rubbing together as furiously as they can, but sometimes, the spark just doesn't happen. SAS mining is going to bring up the end of the show. They've done a crowdfunding thing, and kind of impressive. But let's get into the first one of the day. U.S. Treasury softens crypto tax rules, easing pressure on Bitcoin taxes. Well, at least Bitcoin Magazine and Micah Zimmerman used the word Bitcoin at least once in the headline. The U.S. Treasury Department has issued new guidance clarifying that unrealized gains on digital asset holdings will not, I repeat, will not be subject to the Corporate Alternative Minimum Tax, or CAMT, a move that spares companies like Michael Saylor's strategy from potentially billions of dollars in phantom tax liability. The decision marks a pivot from the Biden-era tax framework and comes as debate picks up in Congress over how to regulate the tax digital, or rather how to regulate and tax digital assets. And even today, there is a hearing on crypto taxation in the Senate's Finance Committee. The CAMT, which was enacted in 2022, imposes a 15% minimum tax on corporations earning over $1 billion in annual income based on their financial statement income rather than the actual taxable income. Under Financial Accounting Standards Board rules, companies must mark-to-market cryptocurrency holdings on their books, which means that they have to record paper gains and losses as if the assets were sold at current prices. The accounting treatment raised alarms. While unrealized stock gains are excluded from CAMT, digital assets like Bitcoin were not explicitly exempt. And for firms like Strategy, who aim to hold $1 trillion worth of Bitcoin, that distinction could have translated into tens of billions of dollars in annual tax bills on unrealized profit. The Treasury's latest guidance excludes digital assets from CAMT liability, effectively leveling the playing field with equities and bonds. This change comes after months of lobbying from industry heavyweights, and in May, Strategy and Coinbase submitted a joint letter to the Treasury Department urging the exemption, arguing that taxing unrealized crypto gains was unfair, unconstitutional, and risked pushing American firms offshore. IRS officials appear to have taken those concerns seriously. The guidance now offers regulatory clarity that could embolden more corporations to add Bitcoin to their balance sheets without fear of unpredictable tax shocks. Senator Cynthia Lummis, one of Congress's most vocal crypto advocates, welcomed the move as a victory in common sense. Lummis said during remarks at the BTC in DC event on Tuesday that the ruling helps American companies build Bitcoin treasuries without the risk of being punished for holding sound money. Lummis has been pushing for broader tax reforms around digital assets, and her latest bill proposed a de minimis exemption, excluding crypto transactions under $300 from taxation, and sought to ensure that lending digital assets is not treated as a taxable event. Pausing to say $300 is freaking nothing. Nothing. That does nothing. I have bought a world-class dinner for me and my wife that came in over $300. Okay, so dude, of course that includes 2 bottles of wine, and that's automatically right there $100. But you get what I'm saying. For Strategy, the IRS guidance is a tax win and a massive green light to continue scaling its Bitcoin first corporate strategy. Michael Saylor, CEO, has framed the company's long-term mission as an accumulation of $1 trillion in Bitcoin reserves, positioning the cryptocurrency as a superior treasury asset compared to cash or bonds. Now, had CAMT applied to digital assets, Strategy risked facing tens of billions of dollars in tax liability every single year, potentially disrupting its accumulation strategy. With the exemption secured, Saylor and other Bitcoin treasury pioneers can now operate with fewer regulatory headwinds, and as previously stated, the Senate Finance Committee is holding a hearing Wednesday titled Examining the Taxation of Digital Assets. So this story actually came out yesterday because, today's Thursday. The hearing comes against the backdrop of a looming government shutdown deadline, but committee officials confirmed that the crypto tax session will proceed regardless. Yes, the shutdown has happened, and we're all going to die, apparently, according to the people that just love government. There's no way that Americans can take their next breath or drink the next glass of water to save their lives without the government in full operation, right? Right, I guess. Now, I'm going to go back up here because I highlighted something. I want to read this again. The guidance now offers regulatory clarity that could embolden more corporations to add Bitcoin to their balance sheets without fear of unpredictable tax shocks. It is very likely that a lot of people that wanted to get into it at the small scale, not a strategy scale, not a Metaplanet scale, hell, not even a similar scientific scale, just, wanted to stack, some Bitcoin on their sheets. But their accountants looking at them going, look, man, let's say you put 10 Bitcoin on your balance sheet. Now, let's say that Bitcoin, I don't know, does a 10x. Now, all of a sudden, it's worth a shit ton of money, and we don't know if you're going to have a tax liability on that or not. Now, if you were making, tens of millions of dollars in net revenue a year, after you've paid all your employees and all your power bills and whatever it is you do, you've gotten all your materials to do whatever widget construction you need, you could still literally not have enough money to be able to pay the tax bill. Because the liability here is Bitcoin actually going to the moon. It's a real liability. And now that the CAMT is basically taken off the table, we could see a wholesale change in the attitude of way smaller companies that you'll never hear about on this show, because I guarantee you somebody buying, 2 Bitcoin for their little mom and pop burger stand is not going to be in Bitcoin Magazine. So this actually may be bigger news than we all think, but we've got other news coming out of the United States Congress. This time it's a senator accusing a crypto billionaire of dodging Puerto Rico tax evasion through an investigation. Well, it's this from Decrypt and Sandra Lutz, and the headline isn't all that good, but here we go. The top Democrat on the Senate Finance Committee, which we just talked about, has accused a prominent crypto investor of refusing to cooperate with an investigation into an alleged billion-dollar tax evasion scheme running through one of the digital asset community's most popular enclaves, Puerto Rico. Senator Ron Wyden from Oregon first opened an investigation into the finance of Pantera Capital founder Dan Morehead. Yes, Dan Morehead of Pantera Capital. Right now, back in 2020, 2019, 2021, we were hearing a lot out of Pantera Capital because that Dan Morehead was singing Bitcoin's praises, and we haven't heard very much about them since until today, because Pantera Capital founder Dan Morehead in January, as part of a broader inquiry into how ultra high net worth Americans have used Puerto Rican residency as a means to obtain lucrative tax exemptions, is being investigated by Wyden, who had not previously publicly announced the investigation until now. This week, the senator blasted Morehead in a published letter accusing the hedge fund manager and crypto investor of refusing to cooperate with the Senate's investigation into his own finances. Quote, "While your attorneys initially suggested to my staff that you were willing to cooperate with this inquiry, they have all but disappeared, heightening my concerns that you may have improperly avoided over $100 million in federal taxes on capital gains that accrued while you still lived in San Francisco," Wyden wrote. The letter, sent to Morehead on Tuesday, said the crypto-focused venture capitalist may have received improper tax counsel, which led him to obtain Puerto Rican residency shortly before earning hundreds of millions of dollars on the sale of a large Pantera position, and then declare that income exempt from United States taxes, which is odd because, from what I understand, Puerto Rico is a territory of the United States and is subject to United States income taxes. So that's rather confusing. Anyway, Wyden argued that this was an incorrect interpretation of Puerto Rican tax law, which he said requires new residents of the island territory to pay U.S. taxes on such transactions for 10 years following their move. I'm still confused because it's a territory, and I thought everybody in Puerto Rico had to pay income taxes. So I guess I'm just clearly wrong. That's okay. Confusion over. Quote, "These are serious allegations of potential abuse of Puerto Rico tax incentives to avoid the payment of U.S. taxes that you must immediately address," Wyden wrote. Morehead did not respond to Decrypt's request for comment. As the Trump administration has moved aggressively to create favorable conditions for crypto companies and investors, Morehead's Pantera Capital has spun up several new ventures to take advantage of the moment. The firm has spent hundreds of millions of dollars investing in Wall Street traded digital asset treasury companies, which have taken off in popularity this year amidst promises of lucrative, albeit risky returns, it recently launched a $1.25 billion effort to convert a publicly traded neurotechnology company into a massive Solana treasury. Pausing to say one of the reasons we don't give a shit about Pantera Capital anymore is because they turned into just straight up shit coiners. It was sad to see because Dan Moorhead seemed to have his head wrapped around Bitcoin, but the siren song of stupidity rang out across the bow of his ship and he ran right up into the rocks. So I don't care about this person anymore. Earlier this week, however, the company Helios Medical Technologies, which once created medical devices designed to improve the lives of people with neurological diseases, formally changed its name to Solana Company. My God. Tabs on the company's website titled Our Technology and Our Research appear to have been deactivated because it's a zombie company. And the only thing they had going for it was enough cash on their balance sheet to convert into, of all things, a shitcoin. Oh, man. People just don't learn. They just don't learn. Oh, well, good luck, Dan. Good luck with all that. Now, on to Helen Parks writing this one for Cointelegraph. Stablecoin duopoly is ending as USDT, USDC dominance falls to 84%. Where have we heard this story before? Yeah, Bitcoin dominance numbers, which have always been dumb, and dominance has now entered a phase of even more dense stupidity. Tether's USDT and Circle's USDC, the two largest stablecoins by market cap, have slowly lost market share in the past year, suggesting a major shift in the stablecoin landscape. Dude, I don't think so. Despite Tether's and Circle's steadily increasing market cap, the stablecoins themselves have lost more than 5% of their combined market share since October the 2nd, 2024, according to data from DeFi Llama. Nick Carter, industry analyst and Castle Island venture partner, took to X on Wednesday to address the decline of USDT and USDC dominance in a post titled, quote, "The stablecoin duopoly is ending." Okay. According to Carter, new issuers will be able to undercut major issuers on yield-bearing stablecoins while banks have an opportunity to bring on big industry rivals, pausing to say, be careful. The yield-bearing stablecoins are going to be fraught with not only fraud, but even for those non-fraudulent guys that release a coin, this yield-bearing stablecoin, dude, watch out. I've watched this movie before. According to Carter, new issuers will be able to undercut major issuers on yield-bearing stablecoins while banks have the opportunity to bring on big industry rivals. Well, Carter noted that USDT and USDC's dominance reached historic highs in March of 2024 when the stablecoin market was worth around $140 billion. At the time, USDT's market cap was about $99 billion, while USDC had $29 billion. Together, they accounted for 91.6% of the entire stablecoin market. Quote, "The reasons are new assertiveness by intermediaries, a race to the bottom with yield, and new regulatory dynamics post-Genius Act." End quote. According to DeFi Llama, the combined market share of USDT and USDC has fallen a further to 83.6% at the time of writing, which represents a 5.4% drop since October the 2nd of last year. Addressing growing stablecoin competition, Carter highlighted several significant stablecoins, including Sky, Athena, PayPal, and World Liberties, all those guys. Quote, "I think it's also worth paying attention to emerging names like Ondo's USDY, Paxos USDG, and Agora's AUSD," Carter added, predicting that many other new stablecoins, including bank-issued ones, will be entering the industry soon. Carter mentioned that many of these stablecoins are focused on providing yields, or rather passive income, just to hold the stablecoin. Again, guys, we've seen this movie before. We've been to this play before. This song has been playing on the radio forever and ever and ever, and it just won't get out of the top 10. Please stop chasing yield. Instead, you might look at ways to generate capital through your own means and your own imagination, because relying on yield has done nothing in the crypto industry except cause people massive amounts of frickin' pain. I'm just saying. Athena's USDE, which passes along the yield from crypto basis trades, is the biggest success story of the year, surging to $14.7 billion of supply. Despite regulatory pressure on yield-bearing stablecoins introduced by the U.S. Genius Act, the trend is expected to continue rising, according to Carter. Quote, newer startups will be able to undercut the major issuers on yield and create a race to the bottom, or realistically, the top. He said, adding that Circle has been working with Coinbase to introduce yields on USDC. Alongside yields, Carter highlighted regulatory changes enabling banks and financial institutions to issue stablecoins. Despite existing concerns about bank deposit runs, banks will inevitably join the industry for one reason or another, Nick Carter said. He also noted related developments, including a stablecoin collaboration between JPMorgan and Citigroup, predicting that bank consortia make by far the most sense. That is because, according to Carter, quote, no bank individually has the ability to create the necessary distribution for a stablecoin which would compete with Tether, end quote. Several major European banks have recently joined the emerging trend. On September the 25th, Dutch lender ING announced a joint venture with Italy's Unicredit and 7 more banks to build a potential euro-denominated stablecoin. Built in compliance with Europe's markets in crypto asset regulation framework, the stablecoin is expected to be issued in the second half of 2026. Dominance is not a number that has ever done anything for anybody anywhere in this industry at any time, all the way back to its beginning in 2008 to 2009. Bitcoin paper was dropped October 31st, 2008. January 3rd, 2009 was the first block minted. All right. Since that time, people have bawled their eyes out about dominance, Bitcoin's dominance specifically. The only thing that it ever really attributed to the dominance number was the rise of alt season or altcoin season, ICOs, and a whole raft of other materials and widgets and all kinds of shit that basically just got people into financial trouble, right? So dominance is rearing its ugly head again, this time in the stable coin market, and it's all about yields. So the question becomes, will a stable coin come along that offers enough yield that doesn't go tits up or, flames out or basically just dies, that is stable enough with enough yield to supplant Tether as the number one stable coin on the planet right now? Chances are very good that answer is no. No, it won't. But here's the other question. Tether's not going to just sit around and say, yeah, we're just never going to do yield. Now, if they do that, then they've got a very good reason to do that. However, I suspect that Tether will release a third stablecoin under the banner of Tether that will be a yield generating stablecoin. And this dominance number is just going to have volatility. And the only thing dominance probably ever did for anybody is that you can probably buy futures contracts as a derivative on the volatility of the dominance number fluctuating. It's all bullshit. Just buy Bitcoin, hold Bitcoin. And you can use that Bitcoin to buy, well, it's the Circle P. You can buy the pleb pack. You can buy dried peaches. You can buy organic freeze-dried mangoes, organic sweet stack medley. It's fruits from my good friend Permanerd. He is the newest entrant into the Circle P family of vendors. Congratulations. Well, actually, not congratulations. I feel like he's congratulating me for letting him into the Circle P. He sent me he calls it a pleb pack. And he sent me one, and it's got like freeze-dried bananas, freeze-dried peaches, freeze-dried mangoes. What else is in there? Bananas, peaches, mangoes. And there was one other one. Oh, apples. He gave me a pack of freeze-dried apples, as well as a pack of freeze-dried oregano. Yeah, the herb. And if I remember right, I think it's lemon balm. And these are fat packs. They are done very, very well. They're done in the aluminum kind of sided thing so that it doesn't get sunstruck. They come with a moisture, one of those little silicon packs that always say "do not eat," and it gathers moisture up. So they're professionally packed, and you can get them at Sats, the number 4 snacks.com. That's Sats4snacks.com. Go over to Sats4snacks.com. Get 5% off if you use the coupon code Bitcoin. And that will also tell Permanerd that I was able to make a sale for him, and he can determine whether or not he gives me any sats back for the sale, because he doesn't pay for this advertising. This is the Circle P, ladies and gentlemen. I'm bringing plebs just like you to plebs just like you that have goods and services for sale. Not everybody can afford advertising, So the Circle P is there for the plebs to be able to get the word in the street, at least to a larger audience than they may have. And if I make a sale for them, then the vendor gets to figure out what that sale was worth, and then they pay me. There's no contract. It's a digital handshake. This is the way. Is it a great revenue model? No, it's not. But that's not really what it's for, is it? The Circle P isn't about generating revenue for the show. The Circle P is about using the audience that I have to help the other plebs do something they want to do, build something that they want to build. People have helped me. This is the only way that I can figure out, at least in the short term, how to help the other plebs out there. So go to Sats4Snacks, Sats, the number 4, snacks.com, Sats4snacks.com for 5% off. Use the coupon code Bitcoin, and that lets Permanerd know I made a sale for him. Maybe one of these days he'll hook up with Stripe, because Stripe launches open issuance for corporate stablecoin issuance. This is out of Atlas 21. On September 30th, digital payments leader Stripe announced the launch of Open Issuance, a platform that allows any company to create and manage its own stablecoin using just a few lines of code. I've seen this movie before too. The new solution is powered by Bridge, a company Stripe acquired last year for $1.1 billion. And according to Stripe, businesses will be able to freely mint and burn tokens, customize reserves to manage the balance between cash liquidity and Treasury securities, and select preferred partners. Stripe also confirmed that all stablecoin issued through Open Issuance will be fully interoperable with one another. The platform stands out for its professional reserve management system. Treasury securities are managed by financial giants such as BlackRock, Fidelity Investments, and Superstate, while cash liquidity is held at lead bank to ensure operational flexibility. According to The Information, which I guess it's in italics, so I guess it's a publication, Stripe plans to apply for a federal banking license, a key step to comply with U.S. stablecoin regulations. The company also intends to seek a trustee license from the New York State Department of Financial Services. Yeah, you're also probably going to need that BIT license too, so just be aware. Last May, Stripe had already launched a U.S. dollar stablecoin money management feature, allowing businesses in 101 countries to hold balances in dollar-backed tokens, receive funds via both crypto and fiat infrastructure, and transfer tokens globally. In June, the company further strengthened its position by acquiring Privy, a crypto wallet specialist. You know what else is called a privy? A toilet. I probably shouldn't have said that. That was just so rude. Bad host. Bad. I can't believe I said shit like that. Okay, this just sounds confusing. I don't expect this to take off. I expect people that use Stripe. Some people will. Crypto guys definitely will. But Stripe, I don't know. The way this looks, I mean, does Permanerd really need to get Stripe and issue his own perma token to sell his perma pack? Really? Does he need to have the mental overhead of issuing and figuring out when to burn tokens? I mean, yeah, I get it. There's way, like, us plebs, we just don't have enough neurons to rub together to figure all this shit out. But honestly, from what I'm reading here, this just, I mean, one of these days it could become big. I could see that. But right now, I honestly think they're just entirely too early. It doesn't really matter. Let's go over to the UK, where they're contemplating theft at the federal level. UK weighs if China fraud scheme victims get current value of the seized 61,000 Bitcoin. Adrian Zmunsky from Cointelegraph. United Kingdom officials are weighing whether to retain billions of dollars in gains from seized Bitcoin tied to a massive fraud case rather than distributing the full current value to the victims, according to the Financial Times. Pausing to say, yes, you should distribute all 61,000 coins to the people that lost those coins, because it's not the value of the coins that they lost. They lost the Bitcoin. That's the property, not what the property was worth. But I guarantee you the UK is going to do exactly what you think the UK is going to do, and they're going to engage in theft at the national level. And every single person that is involved with said theft should be tarred and feathered and run out on a railroad tie, just like we used to do it back before we kicked King George's ass. Fuck these people. According to a Thursday Financial Times report, the UK High Court may decide to reimburse only the original value of the investments, about 640 million British pounds sterling, which is worth 862 million US, to victims of the scam. This is despite the seized 61,000 Bitcoin being worth nearly $7.24 billion at the time of writing, resulting in an excess amount of $6.4 billion. These people are evil. The Bitcoin was seized in 2018 in North London from scammers who defrauded 128,000 investors in China. Some Treasury officials have privately debated whether the windfall could help offset a budget deficit of up to 30 billion pounds. Under existing rules, assets seized under the Proceeds of Crime Act are usually paid into the Home Office or the Treasury Consolidated Fund with court-ordered compensation when required. The Financial Times also reported that other government officials have urged caution, since a decision may lead to a complex legal battle over the Bitcoin proceeds that could drag on for years. The Treasury has been instructed not to use the funds in any of its calculations. The assets in question were seized from Chinese national Zemin Qian and her Malaysian assistant Sen Hock Ling, and we told you all about that shit yesterday. All right, so you don't really need to hear it. What we're talking about here is whether or not the people get the coin or the value of the coin in some fiat bullshit denomination at the time of seizure. When somebody steals my car and the car is recovered, this is in the United States, and the car is recovered, does the police department auction the car off and then give me the proceeds of the car when they find the car? No, they don't. You know what they do? They give me the car. It's the car I want. I don't want the value of the car. The car does a lot more for me than the value of the car, because when I have the car, I can drive myself to the store. I can drive my kids to school. I can do all kinds of shit with a car that I cannot actually do with a lump sum payment of fiat currency that represents the value of the car. No. That never happens. And what other things could be stolen? If I have, like, let's say I get a couple of rifles stolen out of my house, and I go to all the pawn shops, and I say, oh, the serial numbers match. These are my guns. Now the pawn shop's going to go, well, you're going to have to wait until till the cops come present us with a warrant for seizure of the property, because we've got an entire protocol that we and the cops do when stolen property is discovered here at our pawn shop. And I say, you know what? You're right. So I go tell the cops go to the pawn shop. Through whatever mechanisms that they have, they recover the two guns, but they don't sell them back to the pawn shop, take the money, and then give me the fiat currency. No, I get the actual article that was stolen. But yet, there seems to be no compunction whatsoever in any country in the world to say, we're going to give you the original property back when it comes to Bitcoin and, well, okay, I'll just say it, crypto. Why? Why don't we make it mandatory that all stolen property is immediately liquidated for the fiat value, and then that is what's given back to the owner of the stolen property? This shit, if we don't fight this shit on those grounds and say either everything stolen gets liquidated upon recovery or nothing gets liquidated upon recovery, it's black or white. There are no shades of gray here. Property is property, not the conversion of property into something else and then return to the rightful owner. That's bullshit. So it's either all or none. Let's run the numbers. Energy sector just getting kicked in the crotch this morning, yet one more time. It's amazing to watch this happen. And yesterday, I think Jim Cramer from CNBC, has finally given people that have vested interest in energy production, people like me, a way out, because he has announced that he has sold everything that is related to oil and gas. So we're hoping for the Cramer effect to come along. Meanwhile, Merbon crude down almost 3 points to 65.12. Brent North Sea down 2 points to 64.08. And West Texas Intermediate bottoming out at $60.50 a barrel. Natural gas crawling sideways slightly in the green. Gasoline down 2% to $1.84 a gallon. Good luck finding it. All your metal rocks are down except for copper, which is the only one in the green, 1.25% to the upside. Meanwhile, palladium is down 1.4%, gold is down 0.75%, but still at $3,868 an ounce. Holy shit. Platinum is down 0.7%, but silver has taken the biggest hit. It slammed up against $48 an ounce, and the world said, get down. No. It is down 3% today. Okay, ag is pretty much mixed this morning. Biggest winner is sugar, 1.36% to the upside. Biggest loser is chocolate, 3% to the downside. Live cattle down 0.6%, lean hogs down 0.5%, and feeder cattle down 1.5%. In indices, or your legacy, equity markets, the S&P is down 0.13%. NASDAQ is the only one in the green, up 0.15%. Dow is down 0.15%, and the S&P Mini is down 0.25 point. Meanwhile, we're having a little bit of a rip today. $120,060 puts us at a $2.39 trillion market cap. We can purchase 31.1 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,929,132.42 of, and average fees per block are nominal today, 0.03 BTC taken in fees on a per block basis. It's about 30 blocks carrying 105,000 unconfirmed transactions waiting to clear at high priority rates of 3 Satoshis per VByte. Low priorities get you in at 1, and whoop-de-doody-day, 1.01 zettahashes per second on the old mempool.space/mining site. And do that what you will. And from Hazard Signs, yesterday's episode of Bitcoin and I Got Yodel with 513 sats says, hi, y'all. TK Suit Coin with 1,000 sats says the algorithm stable was called Luna. Yes, Luna. God, good times, man. Good times. Also, the derogatory name for core supporters is Communists. You know, play on communist. Communist. Keep up the good work. Thank you, sir. I appreciate that. Let's see here. From a gentleman named Thank You, Sir, with 500 sats says, I suspect that scams like FTX, BlockFi et al. Are still profitable enough to try again. Yeah, you're probably right. Possibly some of the profits have escaped law enforcement. The perpetrators aren't wrecked enough. Thank you, sir. No, thank you. Tulips with 1234 says, I am happy that the Chinese UK scam is finally resolved, and I hope that the UK sells it all as soon as it can and repay the victims. They won't. Just ask EGIPT and their museum claims. Oh, dude, Tulips, you gotta enlighten me on Egypt and their the British. Yes, the Museum of Egypt. That British stole a whole bunch of Egyptian artifacts when the pyramids were discovered in the Valley of Kings. All that stuff, a lot of it ended up in British possession. Yeah, so now I know what you're talking about. Citizens are better allocators of capital than governments, and they deserve to have the BTC plus cheap sats for us when they do. This new wave of lending platform sounds exactly like the previous cycle, and I would advise everyone who listens to not be an early adopter when it comes to loans, because just like BlockFi, might just be tulips, and of course, goes to zero. Wartime with 133 sats says, cheers. JEC2K says, here's another great episode from NunyaBidness. I enjoyed it during my lunchtime walk. Wartime with yet another 133 sats says, Uptober, pump it up. Permanerd with 210 says, what the hell is Shark Coin? Kick says, NunyaBidness brings the news you can use with Bitcoin, and he also brought us the Circle P, bringing products for plebs paid for in Bitcoin. Check them out. Yeah, that's another thing I forgot to mention in the Circle P segment of the show. If you're not selling your goods and services in Bitcoin, you're not in the Circle P. So everything that's in the Circle P, you can buy for Bitcoin. In fact, there's some vendors that only take Bitcoin. So just, yeah, there you go. That's the weather report. Welcome to part 2 of the news that you can use. And when JPMorgan says good things about Bitcoin, you might want to perk up your ears. Bitcoin could reach 165,000 based on gold's record run, according to JPMorgan. Wow. Will Canny is writing this one for CoinDesk. Banking giant JPMorgan says that Bitcoin could climb to around $165,000 on a volatility adjusted basis relative to gold, highlighting what the bank sees as significant upside if the so-called, quote, debasement trade continues to gain momentum. The Wall Street lenders' model suggests that Bitcoin would need to rise about 40% from current levels to match the scale of private gold holdings once risk is accounted for. The world's largest cryptocurrency was trading around 119,000 at time of publication. The debasement trade involves buying assets such as gold or Bitcoin to hedge against the devaluation of fiat currencies. So the debasement trade is exactly what the definition is the word itself, debasement trade. Now, the bank's projection comes as retail investors accelerated their embrace of the debasement trade, pouring into both Bitcoin and gold exchange-traded funds over the past quarter. Analysts led by Nicholas, there's no way I can pronounce this name, but it's Pantera or something, noted that flows into these products have surged since late 2024. The analyst framed the trade as a response to long-term inflation concerns, ballooning government deficits, questions about Federal Reserve independence, waning trust in fiat currencies in some emerging markets, and finally, concerns about a broader move to diversify away from the United States dollar. Well, cumulative flows into spot Bitcoin and gold ETFs have risen sharply, JPMorgan said, with retail buyers driving much of the activity. Retail buyers driving much of... People keep asking, where's retail? Well, according to JPMorgan, they're here because retail buyers are driving much of this activity. Bitcoin exchange-traded funds initially outpaced gold earlier in the year, particularly after Liberation Day, but gold ETF inflows have been catching up since August, narrowing the gap. Institutional investors have also been participating, according to JPMorgan, though mainly via Chicago Mercantile Exchange Bitcoin and gold futures rather than the ETFs. The bank's proxy, based on open interest, shows institutions have been net buyers since 2024, but their momentum has recently lagged retail demand. The steep rise in gold prices over the past month has also bolstered Bitcoin's relative appeal as the Bitcoin to gold volatility ratio hit or has drifted below 2. Now, that shift underscores the bank's view that Bitcoin remains undervalued relative to gold. At least say it again. JPMorgan holds the view that Bitcoin remains undervalued relative to gold, with its current price about $50,000 below where JPMorgan's model suggests that it should be. If you missed it all, JPMorgan is saying, dude, Bitcoin, because of gold. Which, that part, I don't necessarily agree with. They're saying it's relative to gold, but there's some language in this article that suggests that, oh, Bitcoin is having its heyday right now because gold is doing well and doing it first. I don't cotton to that. I think they're both going up independently of each other, but for the exact same reason. It's not gold igniting Bitcoin, and it's not Bitcoin igniting gold. They've both been given full-blown ignition because everything out there is crumbling. Even the Swedes are figuring it out. Cal and Quinn from Decrypt. Swedish lawmakers propose a national Bitcoin reserve. Two members of the Swedish Democrats, the Riksdag right-leaning second largest party, have submitted a motion urging the government to examine whether Sweden should create a national Bitcoin reserve. The motion, filed on October the 1st by, there's no way I can pronounce this guy's name, Dennis Diakarev and David Perez, he's easy, calls for an investigation into how to build a strategic Bitcoin reserve and which authority is appropriate to manage it. It also proposes that the government confirm it does not intend to change the definition of legal tender nor introduce a central bank digital currency. The lawmakers argue that Bitcoin can serve as a complement to gold and to foreign exchange reserves. They describe the cryptocurrency as digital gold with the potential to diversify state holdings and provide inflation protection. Quote, by building a strategic Bitcoin reserve, Sweden is positioning itself for a potentially disruptive shift in the global financial infrastructure, the proposal stated. Momentum for state-level Bitcoin reserves has grown internationally, particularly since March, when United States President Donald Trump signed the executive order to start one. While countries like Bhutan and El Salvador already held Bitcoin prior to this, the shift in U.S. policy has prompted a rethink of other nations around their approach to cryptocurrencies. Several countries such as UK, China, Finland have unofficial reserves of confiscated digital assets seized during criminal investigations, but politicians in countries like Poland and Latvia have also floated the idea of establishing strategic Bitcoin reserves. And then they talk a little bit about Texas and Kazakhstan and something like that. But now we've got the Swedes. Looks like they're trying to get on board. Will it happen? Well, no one knows. Right now, it's just two guys, and they're lawmakers, but they're just positing this, right? This is the earliest place that you can be when a government is quote unquote looking at a strategic Bitcoin reserve. It always has to start with a couple of lawmakers in whatever country that they're at their federal level, writing a letter or writing up the body of a bill, and then they propose that. So this would have a long way to go. We are right at the starting line for Sweden, but something to keep our eye on. Now, Tether adds 8,888 BTC worth $1 billion to its reserves. I swear I've covered this before, but I don't know, man. So we're just bear with me. If you've heard it, if you've heard me do it, just again, forgive me. I've got 3 neurons and they're screaming right now trying to get everything done. Tether, the company behind the largest stablecoin USDT, has moved 8,889 BTC worth $1 billion to its reserve wallet at the end of Q3 2025. This latest purchase brings Tether's total Bitcoin holdings to 86,335. At current prices, that's over $10.1 billion, making Tether one of the largest corporate holders of Bitcoin in the world, alongside companies like Strategy and Block. This is a regular habit. Tether announced in May of 2023 that it would allocate 15% of its net profits into Bitcoin. Since then, it's been adding to its reserves at the end of every quarter. Paolo Ardoino, CEO of Tether, replied, "Yeah," to a social media post tracking the purchase. As with previous times, the Bitcoin came from Bitfinex hot wallets and was moved into addresses tagged as Tethers. Bitfinex and Tether are closely tied together. And for Tether, these transfers are just routine. Tether is building a fortress balance sheet. Alongside Bitcoin, it now holds around 7 tons of gold and more than $127 billion in United States treasuries. By anchoring its balance sheet in non-sovereign assets, Tether is trying to be more than just a stablecoin issuer. The strategy is to be as resilient against inflation as possible, sovereign debt, and market risks as well. By keeping Bitcoin with cash and other liquid assets, Tether is essentially betting that Bitcoin will be a stable hedge over the long term. While Tether is buying more Bitcoin, its flagship stablecoin USDT is still the market leader. Data shows Tether's supply is now at nearly $175 billion, making 59% of the global stablecoin market. They're also launching a new stablecoin called USAT to comply with United States regulations, headed by former White House advisor Bo Hines. It will be issued under U.S. oversight with reserves managed by Anchorage Digital Bank and Cantor Fitzgerald. Now that I've definitely talked about to you before. And then I think I also talked to you about they raised some money, so we won't get into that. But that's a lot of money. What they did not mention, the 7 tons of gold, the shit ton of Bitcoin, the $127 billion in treasuries, that's not all they got. They also own a lot of farmland. And either they own it through an agricultural company that they bought, or they hold that as well as a whole shitload of an agricultural company in, was it El Salvador or somewhere around there, somewhere in Central America. They're moving into food, treasuries, gold, Bitcoin. This look to me, this looks like a new commodities market that's developing. And Tether may actually end up being a new commodities exchange. You never know. I mean, it's far out there right now, but gold, Bitcoin, US treasuries, farmland, which is, you could just consider as, I don't want to say real estate, but raw land, and an ag company. And they're not going to stop. I know that I talk about Tether way often than I should, but these are people to watch, right? Because if they screw up, I get hosed on my Bitcoin, right? So I've got to watch them. If you're interested in Bitcoin, then my suggestion is that you watch them too. We don't have to cheerlead for Tether. If they do something stupid, I guarantee you will hear about it here first. I will not be holding back, but I can't say that I don't like the way that they're doing their shit. They buy Bitcoin and a lot of it. They buy gold and a lot of it. They buy raw land and a lot of it. They buy agriculture, and they also are going. The one thing that is even that becomes negative about Tether is that they're going to have no compunction whatsoever spreading the debt printed by the United States Treasury in the form of Treasury bonds and bills to every third world country in the world, making those countries even poorer than they are. That is a huge drawback to Tether. I don't like it. Now, it hasn't happened yet. No, not really. This is a theory of mine. I think it's going to happen. In fact, I know it's going to happen. I'm betting on it happening. It's going to just be freaking awful. But I can't blame them for buying a bunch of Bitcoin, a bunch of land, a bunch of gold, and now they're knee deep in general agriculture, whether it's the agricultural land or just the agricultural company that they own shares in. I'm looking at a raft of kind of like commodities, a kind of a new raft of commodities, for lack of a better term. So, ignore Tether at your own risk, because they're going to end up being kind of a canary in a coal mine about a great many things. And if you're not looking at what they're doing, I honestly believe that you're missing out on the whole story. Now, last one up for today, SAS Mining surpasses $200,000 in crowdfunding round. Interesting. Key for Lightning News. Let's see here. Where does it start? There it is. SAS Mining, the innovative Bitcoin mining as a service, or BMAS, platform recently announced significant momentum in its ongoing fundraising efforts. The company has successfully secured over $218,000 from early supporters and is rapidly advancing towards its goal of $618,000. The strong interest underscores the market's confidence in SAS Mining's mission to make sustainable and profitable Bitcoin mining accessible to a broader audience. The funds are pivotal for executing the company's ambitious roadmap, which focuses on expanding its footprint of eco-friendly mining operations. Their set goal is building the infrastructure and a future where everyone can participate in securing the Bitcoin network and earning Bitcoin in a responsible way. The capital raised will be strategically deployed to achieve three critical objectives, directly enhancing value for the network and its participants. 1. Strategic infrastructure expansion. A significant portion of the funds will be used to acquire and deploy the next generation of high-efficiency ASIC miners. This will increase the company's serviced hash rate, strengthening the Bitcoin network and boosting potential Bitcoin rewards for all participants. 2. Securing low-cost, sustainable energy partnerships. SAS Mining is committed to a green future for Bitcoin. The capital will enable the company to secure new partnerships with energy providers offering stranded and renewable power, significantly reducing operational cost and minimizing the environmental footprint. This creates a durable competitive advantage. And number 3, platform development and user experience enhancement. Investments will be made into the proprietary SaaS mining platform, making it even more intuitive and feature-rich for users to monitor their mining activities, manage their assets, and stack sats effortlessly. This fundraising round allows to invest in a vertically integrated Bitcoin mining company built for long-term resilience and growth, with a clear path to profitability through its low-cost energy strategy and a $30 million valuation cap. SaaS mining offers an entry point for investors seeking exposure to the foundational layers of the digital asset ecosystem. The fundraiser will remain open until the maximum goal of $618,000 is reached. Accredited investors are encouraged to review the offering details and consider participating before the round closes. And if you want more information, you can go to invest.timestampfinancial.com/offering/SaaS mining and look at it there. And if you can't remember that, and I don't expect you to, all of these articles that I read to you today, all the URLs are in the show notes. So you can just go scroll to the bottom of the show notes. This story right here is the last one in the list. That's it for the show. I hope I brought you some value. If you got value out of the show, consider throwing me some Satoshis, either on Nostr. You give me a big old fat boostagram, because this show right now, and for 7 years, coming up on 8 years, has existed entirely on your donations, right? And when you donate, you're also kind of helping other plebs, because the plebs that are in the Circle P, your goodwill helps them get the word out about their products too. This is all about plebs helping plebs. So you can help me, and at the same time, help some other guys. Get fat boostagrams, streaming me sats with Podcasting 2.0. If you have a legacy podcasting app and you're not using something like Fountain.fm or Fountain app, then you're really behind the times. Get on to Podcasting 2.0. It makes it easy for you to support this show, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.